Okay, well, let's jump into this. Obviously, we both sat down and tuned into the real estate forecast for 2025 with our real estate board. And then during that time, they had a bunch of different speakers out. I think there was, 7 total?
Yeah, I believe so.
Of politicians, economic forecasters, heads of our board.
For sure. Like a very diverse crew, lots of different perspectives, opinions, so on and so forth.
Definitely, yeah. So it was quite enlightening. Obviously, it's always good to see what the city, or not the city, the market is expecting, or what people think the market is expecting for the year coming forward, and so that we can prepare for our clients on what we're in for and how we can best prepare for them. Let's just kind of go through the recap. They did obviously chat about, what ended up happening in 2024 and how we ended up doing numbers wise. They obviously had their predictions from the beginning of the year when we sat in as well, which I believe they said that they were at that point expecting prices to rise by about a 3 to 6%, I think it was. Yeah. Which obviously I think we exceeded expectations, which I'll let you jump into and just kind of go over a little bit how you found 2024 for one thing on your business side of things, what you saw in the market, and then what they kind of recapped a bit with the numbers that they said.
For sure. I think just to kind of dive right into it, the biggest thing that I saw out there in the field would be we had a lot of demand, whether that was people that live in Edmonton already, out of province buyers, just people migrating to Canada. It was just super hot, in my opinion, with just the amount of traffic we were getting. But the amount of inventory we had didn't necessarily really reflect that or really kind of could keep up with some of those demands. So it was pretty sparse for options at times, pretty competitive, and I think that definitely reflects in our pricing increase.
Yeah, very, very competitive out there. Like, obviously, I feel like we were fighting for, at least for the first 6 months, I felt like you were fighting for every house with, obviously multiple offers on every property, running around, showing your clients a ton of properties, taking your chances on some, not winning until you finally hit the target with one property and, finding what it is that your clients really did like, which obviously, like you said, it pushed up our prices.
Which definitely, I think, reflects in those numbers. I think that was just kind of a cool thing to see was obviously predictions were anywhere from kind of that 3 to 6%. And it was cool to see that we were like 10 to 13, which is obviously some pretty substantial growth.
Definitely. And obviously it was pretty interesting, I think, on my side to see that some of the lower price type properties were the ones that grew the most. Obviously I've been in the industry a little bit longer than you, and just seeing condo prices increase for once was actually a little bit shocking, considering they've been struggling for the last 10 years or so. So that was pretty wild. That comes obviously along with the lower affordability of people having higher interest rates at the time, at the beginning of the year at least, and then over the year they obviously dropped, which helped people in a way. I think obviously spurred more people into the market, but we still lacked that inventory.
For sure. It was kind of interesting to see that as well. Obviously you have a little bit more experience than I might have in terms of kind of seeing all the different types of markets over the years. But something that I really noticed firsthand with whether it was first-time buyers or even some out-of-province buyers as well, I find people really value how much space you can get out of something like a townhouse for that price. And I think that's where a lot of that surge in demand was just, like you said, in a time where interest rates were a little bit higher. I think people really appreciate how much bang for buck you can get out of something like a townhome.
Yeah, plus just like you said, first-time buyers, it's a great starter property for people. Getting into something at least where you have a little bit of space, you might have a little yard, gives you more option and a little bit more privacy compared to something like an apartment. Totally. Great spot to start for first-time buyers. That's always something that I think we both obviously try and push clients towards if it's in their budget, because it is a good property type that offers a lot for people, and also I find tends to hold its value decently, where they might not be struggling to sell like something, an apartment style condo may cause them some issues, again situational based, but again that's also a lifestyle choice for people too who don't want to deal with snow removal and lawn care.
Definitely, which could be nice here.
Yeah, absolutely. Or having heated underground parking, for example.
Also could be pretty nice.
Absolutely. So, yeah, overall, I think 2024 was a great year. Obviously, it exceeded expectations from everybody. So I'm kind of curious to see where 2025 goes in that aspect. With, there's so much going on, I guess. Obviously,
that's definitely
a lot of trends that are continuing forward from last year that we expect to kind of see this year again, but obviously with some new twists, probably from our friends down south there. Now, obviously, heading into 2025, what are your thoughts on, where do you think that we're going here in 2025 from what we've seen now in 2024?
For sure. I think right off the bat, one of the biggest things that we noticed last year and that we talked about a lot was high demand and low inventory. That already seems to be the theme here in 2025. So given what we saw last year, I suspect us to kind of have a pretty similar kind of high demand, low inventory situation. But firsthand, something that's really surprised me is how it seems to be such a prevalent thing already. Like last year, I found that it wasn't really a hot multiple offer kind of season till maybe that springtime. I feel like we're already kind of in that mode where last year we got to kind of ease into it a little bit. It's already kind of in full swing.
Totally. Springtime is getting earlier and earlier when it comes to real estate. So yeah, it's funny actually. I feel like we saw this when would have that been? 2022, before they started increasing interest rates. It was the same thing, like January hit and all of a sudden your phone's going crazy with people looking to buy, and yeah, you're hitting those multiple offers already. And like even the other day had a client who wanted to write on a townhouse 12 other offers after being on the market 1 day or 2 days, I think it was. So
for sure,
absolutely wild. I think it ended up selling for $40,000 over list price, which was pretty wild. So it just obviously goes to show that obviously inventory is still low. So hopefully we see some more inventory kind of pop up. But will it match the demand is my question on how many buyers are out there. That'd be the curious question for sure.
For sure. And something that I've also kind of noticed as well too is I felt last year you can almost kind of get away with it a little bit by getting into some of those maybe outer Edmonton area communities. I'm pretty surprised to see how hot even almost like the outer perimeter of Edmonton has been as well. It seems like it's almost kind of trickled outwards, which is interesting to see too. And it seems like you can't really even escape the competition from the city.
Totally, yeah. And I think even some of those outskirts cities had a little bit of lower prices compared to some of the places in the city. Obviously Spruce Grove and Leduc being two examples where they're almost a half an hour drive from the edge of the city, and so prices were always a little bit lower there, but now people are kind of catching on to that. And I think that obviously they're trying to build those towns now too, but again, inventory is struggling there. So anything that pops up, if you do look in those areas, you got to be prepared that when something does come up already, you got to be hopping on it as quick as possible.
For sure. And just kind of build off that too. Like you said, you kind of have to be ready to kind of hop on it. And I'd say that last year, a big thing that I found firsthand is, it makes a huge difference when you can kind of have all those ducks in a row and be ready to kind of rock. And I think that's definitely going to be the same kind of game plan we'll have to have in 2025 too. Is just you'll need to kind of be dialed in right off the bat because things are going to move quick and you got to be able to pull that trigger.
Totally. Yeah, being prepared. Absolutely. Okay, then I guess moving past into springtime. I guess here let's switch that around now. Obviously we've talked about on the buying side, what are your thoughts is if you're a seller coming into 2025, what are you thinking people need to be aware of?
For sure. I mean, obviously we've kind of beat on it a little bit already with multiple offers. I think that's still going to be an advantage you'll have as a seller is you're not necessarily just going to have that one offer you have to work with. You kind of get your pick at what works best for you. And most of the time that kind of reflects in pricing as well. So obviously that can be pretty advantageous. I'm curious to kind of see what kind of lengths it goes to this year. Obviously what we talked about, it seems like it's already kind of in full swing. And we're starting to see, people get pretty aggressive with what kind of offers they come up with and the quantity of amount of offers that even are on the table at a given time. So I'm curious to see, I guess, how competitive and what those offers look like for those sellers.
For sure. I think one thing people though need to be aware of is that like if you still got to be aware of your pricing on how you're pricing your home. I know we saw this last year as well. A few people kind of reaching for that higher price, obviously with the comparables looking like they are selling at or above list price pretty consistently. That would obviously push people's list price higher and higher based on the fact that, there was so much competition for it. But I'd be curious, like obviously you get to that point where I think we even stalled out a little bit like mid to late summer where people kind of started being like, oh, well, I'm kind of getting a little bit fed up of this. And, if you reach your price too far, you got to be a little bit careful that you could put yourself in a bad situation where you do get stuck, because every once in a while there's that one property that tries for a price and they get stuck sitting on the market for a little while. And
For
then,
sure.
you kind of put yourself in a bad spot. So yeah, you got to be aware of kind of what the pricing is look like. You want to obviously work with somebody who's aware of kind of what the trends are and has that, finger on the pulse of the market. So knowing the forecast for what this year is looking like, and then, having an understanding of what those signs are of when things are starting to shift. Like as mentioned, going into springtime, usually, we start to see those multiple offers pick up as we progress towards the warmer months, but we're already starting to see that. So like we mentioned, the spring market could potentially be now and starting even more in February. So if you are considering listing, it might actually be time to start thinking like, hey, look, I might need to get my property up on the market sooner than later, because obviously when there's more competition, then you may not necessarily maximize your dollar in that situation.
And just to kind of backtrack a little bit, you talked about pricing. I think it's definitely a bit of an art for sure. It's a bit of a balancing act. Obviously it's nice to kind of maximize as much as you can with that list price. But at the same time, I find that when you position yourself not necessarily aggressively, but where you need to be, it's really where you maximize those multiple offers. Because at the end of the day, if you've kind of shot yourself in the foot at the beginning with being overpriced, you kind of take yourself a little bit out of that race, and you might not get as much foot traffic in your home as you want. And I find it's kind of a bit of a domino effect in that sense. And then like you said, then all of a sudden you might have that home that sits for a long time. And even firsthand, I find sometimes buyers have a perception of like, everything moves so quickly, that one sticks, something must be wrong with it. And it's never really the case most of the time that it's just a bad house. But I find that it shoots yourself in the foot, and it's something that you can avoid just by putting yourself in that right spot right off the bat.
I think, yeah, then speaking about pricing, I think we can kind of maybe touch on a little bit on kind of what the projections were that they're expecting for this year. Obviously, I think you and I had this conversation. We did feel that maybe it was a little bit not modest. Yeah, I guess modest is the word I'm looking for, or reserved. So, what they are projecting for this year is that, detached single family homes, they're considering maybe like a 2 to 3% increase. Semi-detached homes, they were estimating, roughly a 3% increase. Townhomes, kind of same thing with a 2.5% increase in pricing. And condos, a little bit of an increase, but still kind of being, conservative on that with just a 0.5% increase. So that means single family homes, detached homes, will be jumping up to an average price of about a $550 range. So, it's not a huge increase for sure. Again, similar to numbers that they projected last year, and we obviously overshot that. Mm-hmm. So I'd be curious to see if that is another trend, on whether that, we do jump past that. There's obviously the signs. They did chat about a lot of the things being similar: low inventory, high demand, lots of migration, which we can jump into in a little bit here as well. But, obviously we'll have to wait and see kind of what happens there.
For sure, yeah. I definitely, kind of tend to agree with you there. I think there's a lot of the same kind of factors at play that drove all those price increases. I think something that will be really interesting to see as well is last year we were kind of battling those rates a little bit. They were still a little bit higher at maybe the beginning that people would like. Then obviously they kind of started to trickle down a little bit, and it reflected in some of that demand. I find that right off the bat, we're obviously a lot lower than we were in 2024. And I think it'll just be really curious to kind of see where that progresses, because obviously it's something that buyers tend to keep in mind, and even sellers as well, because it's always something to kind of factor in with what kind of a decision you make.
Absolutely. And yeah, continuing on there kind of with interest rates, obviously we just recently had another reduction by the Bank of Canada on the variable rate, another 0.25%, taking it down to a 3.0, which is obviously a good sign. Not as big of a drop as the last couple, but obviously still trending downwards for the time being. Obviously, I think there's been talk, obviously, that they are kind of starting to reach the bottom of where they might be dropping it to. Obviously, some world events that are, a little bit of a concern with Donald Trump coming into power and obviously threatening 25% tariffs. So that obviously was a big topic through the forecast here as well. And, if that happens, this might happen. If it doesn't happen, then, obviously we stay a little bit on track. Either way, from, what I've been reading in the news, it seems like the Bank of Canada is getting pretty close to their target rate, obviously, depending on how numbers reflect. Ultimately, it sounds like either way, things are cooling down when it does come to interest rates. People are, aren't able to really expect further drops, in my opinion. So, now might be the most affordable kind of things get for the time being, at least, right?
For sure. Like it definitely seems like regardless of what direction we go, it's more or less kind of towards the bottom of that curve. So like you said, either way, I think it's, in terms of a rate perspective, is as affordable as it's going to get.
Totally. And then, yeah, obviously you want to be careful that, with the demand that's there, we might start to see prices increase now. So, there's no perfect, you can't time the market, as we are well aware.
Definitely.
But, obviously people can still continue to try to do it. But, in reality, the right time to buy is whenever you're ready. And I think that, people need to just be prepared for any situation. And that's what we're looking at right now. So
most definitely. Like, speaking of affordability, I think we can kind of touch on that. I think it's really easy to talk about demand in Edmonton and the surrounding areas, but I think the biggest driving force to that demand is obviously still our affordability.
100%. And yeah, we have obviously these people moving from other provinces, Ontario, Toronto, where obviously their prices are quite a bit higher than ours, and so they're coming here with money if they do have to sell a property. Either way, I think if they were living in those cities as well, whether they have a remote job or not, that they were able to transfer, they were making good money to be able to afford living there. So when you come here and our cost of living is quite a bit less, we don't obviously have things like PST that we have to worry about. They're going to be able to purchase homes that might be higher on the scale of people who live here. And so it's just something to be aware of, that, the affordability here is so good compared to those places that, as the demand increases, we're going to probably start to see that shift.
For sure. And to just kind of add on that, like you talk about how much more expensive it can be in those bigger cities, and even just touching on when they might have to sell their homes, so on and so forth. I think a huge thing to touch on is still how big of a difference there is in our benchmark pricing. To use Vancouver and Toronto, for example, they sit anywhere from 1.1 to 1.2 million respectively, compared to us, where we're kind of hovering around that kind of 400 benchmark price, when we kind of factor in all the real estate that we can have to offer. So I think whether or not you're selling and bringing some of that BC or Ontario cash here, or you're just a prospective first-time buyer, no matter how you look at it, it's still significantly more affordable here, and you're just going to have that much more purchasing power.
Which is why we're going to continue to see growth too, right? They're obviously wanting the city to grow, and we're planning for it to double. I forget the number of years that they were planning for, but if the interest in Edmonton continues to stay high because of the affordability here, we're going to grow very rapidly. And that obviously puts us into issues that inventory is already low, and there's still builders are trying to keep up, but at least there's recently at least they've started to make some changes within the city, obviously redoing the Edmonton zoning bylaws finally,
100%.
allowing for more multifamily options, making it easier for people to develop in mature neighborhoods, increase that density, because obviously our city sprawls quite vastly as well. So that's good. That's a good sign for sure, because it obviously, not having that inventory doesn't necessarily only hinder our like purchasing of properties also are rentals, right? Like there's still people here who are, you know, immigrating to Canada. Obviously they're slowing that down a little bit as well. But with all those people moving here, people need places to live, and whether that be rentals or be, you know, purchasing homes, you know, it has an effect on both, and it's starting to reflect in investment properties as well, because you know, those rentals are getting harder and harder for people to get a hold of. And so again, just like in lack of inventory on the purchase side, you know, that pushes our rental prices up as well. And so investing in Edmonton at this point, if you are an investor, there are some opportunities there for sure. Before prices start to get too high, there's the option to buy and have that appreciation, but at the same time start to see those good rent prices where you are, you know, potentially cash flowing at a good price, which is very intriguing, I think, as well.
I think that's like a really good point that you touched on there. Is it's really easy to get caught up in our real estate, I guess, demand, and not necessarily the demand, but it's struggling inventory. I think sometimes our rental market gets kind of overlooked, especially in some of those other bigger cities. I think it's really easy to get caught up in a city like Vancouver, Toronto, but a city like Calgary, you could argue, is fairly similar to us, but they're getting, you know, quite hammered there with those the rental demand and just the fact that there's not really options. So I definitely kind of see what you're seeing as well. It's a bit of a trickle effect, because everyone at the end of the day still needs somewhere to live, whether that's buying or renting.
Absolutely. Yeah. And you can see it, like, we're always a little bit of a reflection in Calgary, a little bit down the road from them. Their rent prices are already way, like, they've grown so rapidly, and
for sure
they're way higher as well. But and it reflects as well that their purchase price is higher, right? So there's
100%.
There's room for those rental prices to grow, or we're not quite there yet. So, like, you know, our purchasing price, you know, if you want to get those rents higher, you get to a point where if the rent exceeds the ability to purchase, then, you know, if somebody can buy a house or rent a house, you would think that they would probably purchase. But again, you never know. Everybody's situation is different in what they value. But yeah, so that's definitely why I think that there is some opportunity here for investors to maybe purchase, as well as on the development side, right? Like, it's easier now to build multifamily properties. You know, they want you to build, you know, 4plexes, 6plexes, to kind of increase that density. As I mentioned, we sprawl pretty rapidly, which obviously puts a tax on, you know, transit as well, because you have to continue to expand it as we get wider. And, you know, we do, obviously, as much as our transit is trying to grow, there's still, you know, it still struggles at times, right? And so
definitely kind of a little bit behind in that department, I guess. It's kind of, I guess, like you're saying, we're getting pretty wide, and it's the infrastructure isn't necessarily there quite yet. Obviously, there's lots of great projects like the Valley LRT line that are going to really help alleviate some of that stress. But like you said, it's definitely something to factor in how wide we get.
Definitely, yeah. So hopefully they continue to develop that stuff. Obviously, it's needed. There's a lot of people who can't necessarily afford a car, and Edmonton is very much a city where you need a car.
For sure.
And especially in the winter times when it's cold. So we'll see what happens in that situation.
Yeah, I think, like, you know, touching on how widespread Edmonton can get, and just even some of the development you're talking about too. There's lots of kind of resurging communities, specifically kind of central. There's a lot that are kind of around the outer perimeter that are amongst some of the newer ones. I guess something that I kind of want to ask you is, based on what you were kind of seeing last year, a bit of this year, the forecast, all those different kind of factors at play, what were some of the more hotter communities that you found in the Edmonton area?
Well, just based on, you know, the transactions that I did last year, the southwest obviously
100%.
Still continues to be kind of the most popular areas. You know, I think that they mentioned in the forecast that between Chappelle, I think Chappelle was number one and Secord was number two for the most sales or transactions for last year. So that just kind of goes to show that the southwest and west seems to be the highest demand areas, which that's where most people that we talk to through our database and everything, they
100%.
seem to be, you know, targeting on. Obviously, it gets a little bit more expensive in those areas because of that demand. And there are other communities around the city that offer similar aspects, whether it be community leagues, schools, things along those lines,
100%.
newer development. But, obviously those places that have that high demand also kind of get the most rumblings and the most word of mouth. So that's why it does kind of continue to attract other people. And then, like you mentioned, you did speak, obviously, there's, some research into some older neighborhoods as well. There's always those people, and there will always be people who kind of like those mature neighborhoods, which kind of goes back to our, development that we were talking about before and infills. And so, we are seeing tons of infill opportunity, in areas like Garneau, Ritchie, those kind of really nice, like, quaint neighborhoods.
Kind of south central pocket.
Totally, kind of your west and east 82nd Avenue. And then, there is still obviously the development across the, north end of downtown as well. A little bit of different demographic on neighborhoods there, but opportunities for, cheaper lots. If building something new in an older community is something that you're interested in, then there are definitely some options there as well. Westmount too, that's another great community that if you want it to be on the north side, that's seeing tons of redevelopment. So lots of opportunity for people that way.
Sure. I think honestly, like, we could kind of go on and on about all the different little communities and pockets that do offer those opportunities, whether it's something newer with that community feel or amenities, or something older that kind of gives you that opportunity to build it and make it your own. But I think kind of just backtracking, it's definitely the Southwest is our heavy hitter, I would say. People just seem to really kind of flock towards it. It remains to be pretty high demand, and obviously it reflects in some of the competition that me and you see when we work those areas. And then I think another thing to even touch on as well is even in the Southeast, a community like Summerside and Walker is still pretty hot, I would say. It offers similar kind of aspects to some of those communities in the Southwest, where you get lots of community aspects to it, lots of different kind of community leagues, amenities, specifically like Summerside, where you got that lake that's exclusive just to the people in it. I think the point is just that the South is still amongst some of the more desirable places to be.
Absolutely. And spreading outside of the city to the south too, right? Like Beaumont, I think, was one of the fastest growing small communities across the country, with how many people and development that there is going on out there. So that's cool, because that was such a small, quaint little town, and it is growing rapidly, and it still has its quirks for sure. And it's a nice, quiet community at this point still, but it's growing very, very rapidly, which is great to see.
For sure. And if you're someone who doesn't necessarily need to maybe work central or travel a whole lot, they can stay pretty close to their home. Depending on where you are in some of these south communities, you get pretty close to places like Beaumont, Leduc, Devon, so on and so forth. So it really kind of expands those options as well. And like you said, they're growing just as fast. Yeah, I think, we've talked a lot about, what we're seeing out there, specifically firsthand, whether it's that demand, inventory levels, the reason why we're seeing it, the specific pockets that seem to be kind of hit with this demand. My question for you is, now that we've really looked at what happened at that forecast, and we take into account some of the experience that, me and you share in our market, what is your kind of final thoughts of what you think is going to happen in 2025, and just like kind of your perspective on what to expect?
For sure. Yeah, I do agree with the fact that they did kind of think it's going to be a similar kind of pattern to last year. There is that lack of inventory. There's still the high demand. There's still the interest rates that are a conversation for a lot of people. I think we're just getting maybe into the next step of those conversations where interest rates are lower now. They did talk about how there's potential that there were a lot of people on the sidelines waiting for those interest rates to drop, and now it's starting to cool down, and people are going to start hearing in the news that there might not be any more drops. So I think that's going to pull a lot of people into the market, which is going to create that demand. Obviously, if we do see those tariffs that have an effect on our economy, where they might need to kind of reconsider increasing interest rates or whatever, that could obviously put a stall on maybe the trajectory that we were going. But overall, I think like high demand, low inventory, you're going to want to be prepared, have that pre-approval in place, have all your ducks in a row so that you can
crucial.
Get ready. So when you do hit that multiple offer, you are prepared, you know how to write perfect offer that's going to win you in those situations, and you're going to get that dream home, right? But overall, I do think that we're going to see an increase in our prices. Lack of inventory is bound to kind of push those prices upwards. So yeah, I do agree with him in the fact that like it'll be a very similar year to last year. Just it could be a little bit beefed up, I guess,
100%.
With more buyers out there. And so it'll be interesting to see as well with how many people start to list their properties too, right? There's a lot of people coming into home renewals where, they purchased when their interest rate was very, very low. 5 years ago, they were, 1.5%, 2% roughly. So those people now are looking at 4 to 5% interest rates where it's doubled for them. Obviously the stress test is there to help protect against that, but people's situations change, so we may see people looking to downsize, and so there could be more inventory that way, but will it match the demand is my question.
Totally. I think there's kind of two things to touch on there. I think the first thing you really hit on is I think we have the makings for the same market. Like I think, no one really has a crystal ball. No one can predict what's going to happen, especially kind of at the global stage with some of the stuff that maybe has been discussed. But it doesn't take away from the fact that we have demand. We don't necessarily have that inventory. And there's even some new factors at play here with those rates. So I do agree. We have the making for that same kind of a market. If not, we've even have some things to kind of add to that fire, I guess you could say.
I agree. And I'm sure people have their comments on what they're going to see in the housing market this year as well. So if you do, feel free to drop them in the comments below. And or if you have questions or want to know more, you can always reach out to us as well. Our information is in our bio. And then as well, we always appreciate if you follow along. So hit that subscribe button, hit the bell, and we'll catch you in the next video.